Hello, everybody. We are here
Hello.
this morning to hear Mr. Wally Burbage, and he's going to explain all about floods and hurricanes in the lower country. So, Wally, turn it over to you.
Great. Well, welcome everybody. This is kind of a new world for me too. I am here in the office though. I'm actually in the West Ashley office today. All our offices are open. Both the Allstate offices and the Alliance offices are open and seeing customers and taking phone calls. We actually never shut down the offices for phone calls, but we did shut them down for seeing people. But we're back in business, so glad to help you in any way we can. So today we're going to talk a little bit about flooding and hurricanes because we're getting into the season. We're actually in the season. But those of you who don't know us, we are the insurance division of AgentOwned since 2001, and we can do insurance anywhere in the state of South Carolina for you and your clients. So as I said, hurricane season started June 1st, and it's certainly coming in with a bang. We are already at 3 tropical storms, and we're feeling some of the effects of one of them right now in our area with all the clouds and the rain. But it lasts through November 30th. The peak of the season is typically September 10th, actually where the historical peak is for most of the storms. But you can see that's where the majority of the hurricanes and tropical storms have happened. This year, 20 season, they've already predicted that we are having a 60% probability of a higher than normal, above normal hurricane season. So please keep your eyes wary of the weather forecast. We will, from time to time, send out emails to all your brokers to let them know that something is coming and there may be a stop in binding of coverage. If you have a closing happening, we typically try to give you as much notice as we can to make sure that you get your clients to get a binder in place, because when storms get in certain areas, insurance companies will stop binding coverage. So it's important to get it in as soon as you can. So they're predicting that we're going to have 13 to 16 named storms this year. Of those named storms, 6 to 10 will be hurricanes, and of those 3 to 6 will be a major hurricane. This is a map of the Tri-County area, and the next map is a map of the flood zone of the Tri-County area. As you can see, there's no change between the two. And the reason I say that is because many people think, well, if I'm not living at the beach, then I'm not in a flood zone. Don't worry about flood. And anybody who's lived here for any period of time know that we've had floods all over the place, all over South Carolina, all over the Southeast. We had major floods in Columbia a few years back with a bulk of rain coming in, levee dams breaking. So floods can happen anywhere. Just don't think it's a coastal issue. It can happen anywhere, any neighborhood, whether there's a river, whether there's a creek. It can just be storm drainage backing up. So, some areas of the low country are higher risk than others, and that's deemed by the floodplain management, and they determine what areas are higher risk than others. The National Insurance Flooding Program is the NFIP, and all insurance companies write through the NFIP. It's a federal program, and anytime you want to get a flood policy, an insurance company will go to this system and price it based upon the NFIP rules. It is an agency of FEMA. It's a part of the FEMA program. So policies cover up to $250,000 for the dwelling. So if you have a house on Isle of Palms that's sold for $2 million, obviously the lot is worth a lot of money in Isle of Palms. So you take the lot out of that, and then what is the dwelling worth? Let's say the dwelling is worth $1 million. The maximum amount of coverage you can get on an NFIP policy is $250,000. Most banks do not require you to get excess flood, but some may. The price is the same from all companies. If the information is put in the same, all companies will provide the same price, all insurance companies. Because again, we all write through the FEMA program. There is excess flood available for dwellings above, 250,000. It is expensive because it goes to the private market. It's a Lloyd's of London type of program. It's fairly expensive. We have in the past seen some banks that require it for these high value homes, but no, it is available and we can provide that for you. So what is flooding? It's a general or temporary condition of partial or complete inundation of normally dry land areas from the overflow of inland or tidal waters and the unusual or rapid accumulation of runoff surface waters of any source. Basically, it is rising waters. Anytime the water rises up, then that is considered a flood. If a storm drain in a neighborhood gets clogged and the rain accumulates on someone's land and goes into their house, that is a flood. It doesn't have to be from a river. It doesn't have to be from the ocean. So there's two main types of floods flood zones for y'all to be concerned about. The preferred risk and the standard. When we say standard, y'all are probably thinking the mandatory. So the preferred risk is the lower risk of the flood zones. And that's anything B, C, D, and X. And they're all in the voluntary zones. The mandatory zones are A and V. So that's what y'all are really concerned about. Is it an A or a V zone? Maybe AE, maybe V1, V2, or whatever. But if it says an A in front of it, that's going to be deemed a mandatory flood zone anytime there is a federally backed loan. Okay. So they're going to require there be a flood policy in an A or a V zone. Anyone in these other zones certainly can get a flood policy and should consider getting a flood policy. The price will be much less in a preferred zone than in a standard or a mandatory zone. So the land in a standard flood zone or a mandatory flood zone is subject to a 1% or greater chance of flooding in a given year. Not a big percentage, but it is the highest risk areas that we're talking about. 1%. Preferred zone is obviously less than 1% in a given year. Doesn't mean it's got a wall up. Doesn't mean it's somehow safe from getting flooded just because it's in a preferred zone. There's no walls between a mandatory and a preferred zone, so runoff can obviously go from one zone to the other. Typically, a preferred risk, again, the low risk, anything other than an A or a V, for $250,000 home is about $430 a year. Not very expensive. So the flood insurance program in our area was started on January 1st of 1974. It's called the Flood Insurance Rate Map firm. And any building or structure that was built and had a CO before that date is something called pre-firm. So if there was no building code for flood prior to January 1st of 1974, then they had no way of knowing how high they needed to build something to be within code, obviously, today's code. So the program actually allows for a house that old to get a rate called a pre-firm rate. And it's something that we have to apply for and prove that the house was built before 1974. And there's a discounted rate on that based on the condition and the height of the house. But anything after that is in the rate mapping system and can be priced normally. So in every area, there's something called a BFE, that's a base flood elevation. It is basically that 1% line where they predict the flood will go in a neighborhood. You can't see it, there's no sign, doesn't show you where it is, but all the surveyors know what the BFE is in a particular area, or a particular lot. They can look it up and find out what that is. And this is what they use to decide how high to build a house in a mandatory flood zone. And the price of a flood policy is the difference between the BFE, that base flood line, and the structure, living space of the structure. So how high or low it is compared to that BFE. So this is a good illustration to kind of show you. The red line is that BFE. A house built on stilts, as you can see, and typically we see this obviously in the islands or in a marshy area. Is a still built house. So it's obviously above that BFE. The The house on the ground, you see the yellow house on the ground, is below the BFE. So the price for that house for a flood policy is going to be substantially higher than the elevated house. It shows you kind of the zones. A V zone is the most severe zone. When you think of V zone, think of velocity, a velocity of water knocking a house over. That's what V stands for. A is your next most severe zone, and then X is your voluntary. Anything after that, X and B and A, or your less severe and not mandatory. So the determination of how a house is built to code is determined in these mandatory flood zones by the BFE and how high it will be. So this is a diagram of a construction. You have a house that's built on grade. Bottom floor is A, and then the next highest floor is B. If the grade that we're looking at here is above the BFE, then there's no issues with the flood policy. But if the BFE is closer to the B area, then the price is going to be pretty high because your bottom floor is below the base flood elevation. So crawl space houses have vents, and these vents are actually, most people think these are for keeping moisture out or keeping airflow, but these are actually flood vents. They're called flood vents for a reason, because they allow the free flow of water underneath the house. And in an A zone, there is code as to how many vents that need to be in a house. It's kind of important because if they're not properly vented, then we have a problem with the rate, and the rate goes up. Flood vents are defined as permanent openings. They must be not less than 1 square inch for every square foot of enclosed area. So if you have a 100 square foot bottom floor of a house, you would have to have 100 square inches of venting somewhere around the house. They can be no more than 1 foot from the ground. So FEMA deems that it's got to be within 12 inches of the ground or the vent won't count. So that's a properly vented house. It's obviously within 12 inches of the ground. This is not. And I see this a lot when I go to look at houses when we have problems with the flood policy. The builder builds the front of the house to look like this. And then houses, typically the grade sometimes slopes away from the street for drainage purposes, but they put the vents on the same brick level as the other. And we get this in the back because the grade is lower. This causes problems for the flood policies. There's ways around this. We can help with that. There are obviously crawl space doors for every crawl space. So sometimes we can turn those into vents and help make the allowable number of square inches to make it the cheapest possible price for the flood policy. So this is a building diagram 5, which is an elevated dwelling. Typically what we see, in an A or a V zone. Obviously we see this at the beach a lot. This is an enclosure in an elevated house. So word of caution here, for those of you who sell at the beach, sell a lot of elevated houses. Be careful. This is a red flag. If you are in a beach area and you have an elevated house that has an enclosure underneath, they're advertising on MLS this is a great thing that we've got, a man cave, a storage area, an additional apartment to rent out. A lot of times these are done after the house is closed. Sometimes they're not done with a building permit because this is a problem for a flood policy. So if the house didn't have the enclosure, if it was like this, we could rate it at A, the first floor of the elevation. But because it has a structure in here, we have to rate it now at the ground level. And it's going to change the price significantly. It can go from, let's say, $1,000 a year for a flood policy to $10,000 or $15,000 a year. It can kill a deal. It really is a big issue. So just be cautious of this when you're listing or looking to make an offer on a house that has an enclosure on an elevated house. It can be a problem. We also see this on crawl space houses. We see a lot of people, as you'll probably have seen in the past, they enclose a garage. So all garages obviously are built on the grade, and they enclose that. And whether they were in a flood zone when that happened, or the flood zone changes and they're now in an A zone, that's going to be a problem, because now the whole house is going to be rated on the garage floor level. That's going to be a problem for the flood policy. It's going to be more expensive than it would have been if it hadn't been enclosed. So just be aware of that also. Basements, something we don't see much around here. If they are, they're probably swimming pools by now, but we don't really deal with those a whole lot, thank goodness. So this is a flood determination form. This is what we can provide for you. It determines what the flood zone is. I don't know if y'all can see my cursor. Can y'all see my cursor? Anyway, yes. Number 4 here is the flood zone determination. That's the AE. That's an AE flood zone. So obviously a flood policy would be required in the event there was a federally backed mortgage. All that does is just tell you what flood zone it is in. Our offices are available to provide you with a flood zone determination at no cost. All we need is the address of the property. And if it's something that hasn't been built, in the last few months, we can typically look it up, no problem, and find what the zone is. Don't rely on the MLS. A lot of times that is old information. Please, when you're making an offer or listing a house, get the current flood zone determination, so you have the most current information. So this is a house on Isle of Palms, and those of you who've been around Charleston for a while, or Isle of Palms for a while, know that this is an old J.C. Long house. This was built, obviously, before 1974. Liz, do you know when J.C. Long houses were built? Back in the 60s, probably?
I don't know. I'm not old enough.
Yeah, I know you're not. Yeah, they've been around for a long time. People can update them, but they're all cinder block houses, and they're all built on the ground. You can get a good value, I guess, for these things, but the problem is the flood policy, because they're all going to be in a flood zone. They're all built on the grade, on the ground. They are going to be expensive for the flood policy. Just know that when you see something like this at the beach. This is an elevation certificate. We are required to have an elevation certificate. Any insurance company is required to have an elevation certificate to be able to price a flood policy in an A or a B zone. No other way around it. The surveyor goes out and he puts in these numbers to telling us where the level is in the house, where the living area is, where the grade level is, what the BFE is in that area. The base flood here is a level 14. As you can see over here in the right center. The house, the bottom floor is 10.3. So we've got a problem, because the BFE is at 14 feet and the bottom living space is at 10.3. So obviously it's underneath the BFE. There's going to be a problem in this policy from a standpoint of rate. The price is going to be fairly high in this, unless there's something that we can look at to mitigate that. So this is your typical elevated house on Isle of Palms. Looks good. Looks like it's got lattice here on the left side. It's a drive under. I can't tell if they've enclosed over here on the right, but that could be an issue. But otherwise, if there's free flow, no permanent walls here, we're going to be in good shape. Now, there are something in V zones called engineered breakaway walls. Documentation will need to be provided for those. Those have actually solid walls in an elevated house, and the flow of the water can actually push against these walls and break the pins and not take the house down, just knocks the walls down. So it's engineered to be able to sustain a force of water and not take the house down. And that is the problem when you enclose underneath a house like this and put permanent walls. If the water comes, it can knock the whole dwelling down. So that's why the rate would be substantially higher. Again, another elevation certificate, a little bit clearer here. Looks like the base here is a 15, and the bottom of the lowest horizontal structure is 17. So we're in good shape here. We're above the BFE, so that helps. Again, this is a VE zone. Again, we have to have the elevation certificates to be able to price a flood policy through FEMA. There's no other way around it. We can sometimes get them from the seller. We can sometimes get them from the county or the city, or they may have to produce a new one. They're running about 350, 400. Is that about right, Liz?
Yes, that's right. Sometimes a little bit more, but I keep
Okay.
it muted so I don't bother you.
It's okay. But yeah, we're going to have an elevation certificate. Any company, again, will have to have an elevation certificate to be able to do an A or a V zone flood policy. All right, so there is a 30-day waiting period on a NFIP policy unless there's a change in title and there's a mortgage. So if you have a cash sale and you are somebody's buying a house in an A or a V zone, there would be a 30-day waiting period on the flood policy. That can sometimes be a problem. So we have a way around that. We found that if they'll just do a home equity loan, just a small line, $5,000, $10,000, or whatever, just have some mortgage on there, we can actually do immediate coverage on that policy. So it's just a little trick for your cash sales if they're nervous about storms or they're buying during the hurricane season. Otherwise, there's a 30-day waiting period. So if you think about it, it's kind of smart. So we're having storms coming right now. People don't have policies. They look up and there's a storm coming within a week, and everybody wants to get a policy. So they rush to get a policy, and then after the storm comes, they cancel the policy. Well, that's what FEMA's trying to avoid. So that's why the 30-day wait is there, unless you're having a title change or a new mortgage. Flood policies can be assumed. I caution you on this, just assuming flood policies. Your listing agents many times love to tout that this policy is assumable and just assume it. You don't have to worry about it. There's a lot of issues that come with that. Sometimes policies are not rated properly. Sometimes they're rated with bad information. So it's always a good time for your buyers, especially, to get a new flood quote on a policy, even though there's an existing flood policy there.
Wally, I might emphasize what you're talking about with the cash.
Yes.
If you're a cash buyer, you just need to make absolutely sure that you tell those cash buyers when they make the offer that there's a 30-day wait for the flood, because if they find out at the last minute, they're not very happy with you, the agent.
Yeah. And again, you can just get a little HELOC loan. I'm sure somebody would be happy to do that for y'all. And there's equity in there, and that would actually solve that problem. All right, so if a storm blows the roof off my house and it rains and damages the house, is that a flood or a windstorm damage? So in this particular case, because the rain came from above, not from the ground up, this is actually a homeowner's policy claim. So in the event a hurricane comes and storm surge knocks over my house, what type of claim is this? Well, the storm surge is actually coming from the ground up. So this is actually a flood claim. So if you were in New Orleans and during Katrina and your house was damaged like this, obviously everybody evacuated, right? Most people that lived evacuated. They come back and they find this. The question was there, the great question to everybody, all parties, was what caused it? Well, if we weren't there, how do we know what caused it? Nobody's there. How can you tell what caused that? So if many of these people only had homeowners policies, they didn't have a flood policy. They may not have a mortgage, so they decided they didn't want a flood policy. So now the engineers, the insurance companies, the actuators, they have to determine what caused this damage. So this could have been wind, knocked the building over, and then the flood came, or it could have been the flood that knocked the building over. They don't know. So if you have coverage, if you have both a flood policy and a wind policy, then you would have coverage one way or the other. But that is the big problem with what happened with Katrina, is that many people in that area didn't have flood policies, and there was very difficult to be able to determine which caused the damage. We do have cash buyers. We do have other very wealthy people that decide they do not want to get a flood policy. We make them sign waivers because we want to make sure that they know that we are advising against that. But some people do that. They will not be coverage for any type of rising water damage, though, in those situations. I've covered that. NFI policy is the only way to cover rising waters through storm surge, wave wash, tidal, or overflow of the body of water. Okay. So you may have questions from your customer. Do I need a flood policy? It may or may not be required depending on the zone that they're in, but we always think it's a good idea to recommend that them consider a flood policy. If they're in a preferred zone, it's not very expensive. Again, floods can still happen in these zones. And that's all I have for y'all. Are there any questions?
Yes, Wally?
Yes, go ahead.
Yeah, I just want to make sure, because I'm desperately looking for an elevation certificate for a property in Ridgeville.
Yes.
The seller, I'm the agent for the buyer. The seller says she doesn't have it. She's only had property for a year. So I'm pretty sure she had to get an elevation report in order to get insurance. But now I know I can go to either the town or the county and see if they have it. Otherwise, I'm going to have to direct my buyer to purchase a elevation report, correct?
That is correct, yeah. How old is the house?
The house was built in 2001.
Okay. Yeah, the county is it the city of Ridgeville or just the
It's the city of Ridgeville. It's the county of Dorchester.
Yeah. You're probably going to get it through the city. They'll have it to give them the CO. They should have a copy of it.
Do you think that the seller's old insurance policy, flood insurance policy company might have it as well?
They may. You can.
Okay, I'll try them too.
And most of the times they will provide that.
Okay, thank you.
Absolutely. Any other questions? All right. Well, thanks, everybody. I hope this was helpful. If you have any questions in the meantime, please give us a call. We'll be glad to help in any way we can. Again, we'll provide elevations determinations for you, or flood zone determinations for you. Just give our office a call with an address.